Welcome back. Thanks for staying with us. So motorists will pay more for fuel from midnight. The Department of Mineral Resources and Energy has confirmed that the price of both grades of petrol will increase by 75 cents per litre. The diesel price will increase by between 70 and 75 cents per litre, while Illuminating paraffin is going up by 71 cents per litre at the retail level. The department has attributed the latest increase to the current geopolitical tensions in the Middle East that are affecting the transportation of oil and the weaker rand exchange rate.
The extreme cold weather in the United States is also listed among the reasons for the recent fuel price hike. The Department of Mineral Resources and Energy says this impacted production, which resulted in more than expected inventory draws. The department releases the adjusted fuel prices monthly. These prices are informed by international and local factors because South Africa imports both crude oil and finished products at a price set at the international level, including importation costs.
For these increases are the higher oil prices because of attacks on the oil cargoes in the Red Sea and the cold weather that affected oil production in the USA during the period under review. The rand weakened against the US dollar during the same period. In line with the provision of the self-adjusting Slate levy mechanism rules, the Slate levy on petrol and diesel will remain at 0 cents per litre with effect from the 7th February 2024.
Market analysts say geopolitics may be a factor in fuel price hikes. However, this is not too concerning.
The geopolitics side of it, I think we actually at relatively similar-ish levels to when things started unfolding last year. So it's definitely a factor, but I think the things that you'd maybe look at are playing a bit more of a role now and kind of pushing oil to where it's at the moment is the fact that there's concerns around global growth, specifically around now the hawkish stance from the Fed, as well as supply coming back on board in the US. Both of those things are going to put a kind of dampener on oil prices.
The DMRE says there will be no Slate levy implemented in the price structures of petrol and diesel in February. It says this is due to the cumulative Slate balance on petrol and diesel at the end of December last year, which had a positive balance of 1.1 million. Despite the latest fuel increase, inflation is expected to continue its downward trajectory in the coming months. And the market is already pricing in a rate cut later this year. Nothando Makutulela, SABC News, Johannesburg.
For more on the latest fuel hike, we're now joined by Old Mutual Group Chief Economist Johann Els, and he joins us via our video link. Johann, thank you so much for joining us this evening here in SABC News. Perhaps let's start off here. What is your take on the latest fuel hike, which kicks in at midnight?
It's very unfortunate for us as consumers. We're already pressured by high inflation and high interest rates, and on top of lots of fuel price increases during the course of last year, despite the fact that we had some decreases at the end of last year. This is unfortunate, and cash-strapped consumers are clearly suffering. But I think the outlook for this year is perhaps a little bit rosier than what it feels like at the moment, given the fact that relative to last year when we had rising inflation and rising interest rates, we're expecting lower inflation and lower interest rates during the course of this year. So gradually throughout the year, consumers should feel a little bit better about themselves and their own household finances. So gradually things should start to improve. And it's one of those things that at the moment we can't see it, we can't feel it because of the high petrol prices, the increase that we see this week. It will likely feel very depressing. But if we look through that noise towards the slightly medium to longer term, things will start to improve gradually.
And, we are being told that this is mainly due to the tensions in which we are seeing over the past couple of months in the Middle East. How has that actually impacted South Africa?
Absolutely. Similar to what we saw at the start of the Ukrainian war, when food and oil prices were heavily impacted and we suffered because of that. Middle East tensions are putting some upward pressure on the oil price. But then throughout the course of this year, we do expect somewhat slower global growth. That would mean less demand for oil. That should limit price increases. So, of course, there's a huge risk of Middle East tension in terms of the oil price. But if those tensions should die away, the overall demand-supply situation for oil should mean steady to somewhat lower oil prices. Plus, on top of that, the fact that we're going to see some interest rate decreases, interest rate cuts in the USA, the dollar's likely not going to strengthen anything significantly further and perhaps even weaken a little bit. That's an environment where we would see the rand that is totally undervalued at the moment to come back a little bit. So the combination of a stable to slightly stronger rand and stable to slightly lower oil prices should mean that we should look forward to lower petrol prices during the course of this year. And perhaps not significantly lower, but lower nonetheless. And that will feed through into that lower inflation that we expect. Food inflation is also drifting lower. So that what I mentioned earlier, lower inflation overall, which will allow for lower interest rates. So 2024 should be a better environment for consumers than last year.
And, also looking on the other side, if the problems in the Middle East do take a while to be resolved, can we expect to see more of this trend, to see an increase in fuel prices for South Africans?
Oh, that's the big risk. And of course, that's very difficult to forecast. We don't know how the Middle East situation is going to play out over the next few months. If there's a blowout and increased activity, war activity perhaps, then certainly there would be upward pressure on oil prices, and then all bets are off. Similar to the situation when the Ukrainian war started. We're of course hoping that things will play out and die down in terms of the activity there, but that's a big risk.
Yeah.
And then all bets are for the global economy as well as for the South African economy. So if one assumes that blowout will happen in the Middle East, then of course the oil prices will go up significantly and the rand will weaken, and that will mean higher fuel prices and higher inflation and perhaps even higher interest rates. So that's the bad scenario. I think the probability of that scenario is still much lower than what most people are thinking at the moment. It's not the base case. So it's a risk, and risk means it's not the base case. It's something we need to watch.
And Johann, you seem to be also focusing mostly on the positives when it comes to interest rates. I mean, we have been told even as early as last year that 2024 could see a reprieve for consumers. Less inflation rate, of course, and less interest rates rather, and lower inflation at the same time. And when you look at this petrol price increase, what does it mean for consumers? Obviously we know they'll have to dig deep into their pockets, but it won't be for too long.
Of course, that's the thing. If you and I, we've got limited monthly budgets, so if we have to spend more on petrol for our transport, we've got less money available to spend elsewhere. And that keeps a lid on other price increases. And that's why the core inflation, headline minus food and energy, will probably remain very subdued. It's around 4.5%, which is the midpoint of the Reserve Bank's target range. So that means there's no significant upward price pressures on other goods and services. And that means that this petrol price increase is almost deflationary in terms of other goods and services. And that's good for overall inflation. It keeps a lid on overall price increases, despite the pain that you and I feel. But that lid on overall price increases, keeping core inflation around 4.5%, that will allow the Reserve Bank to start cutting rates over the next several months.
And overall, for the state of the economy, I mean, we are having a struggling economy in South Africa and, low economic growth. And if we talk about, the increase in fuel prices, but at the same time, we can expect a decline in interest rates. What does this mean overall for the state of the economy?
It will certainly help. Lower inflation, lower interest rates will make it easier for businesses and for consumers in terms of their spending ability. So certainly it will help. But the biggest impediments in terms of economic growth is still the structural issues, the lack of electricity, the logistical issues around Transnet and other issues, tight regulated labor market. So there's a bunch of other issues that's a bigger constraint in terms of economic growth than interest rates. So certainly lower interest rates, lower inflation will help on the margin, but we need to keep on sorting out the other issues. There's some light at the end of the tunnel there in terms of where there's failures of the state and failures of state-owned enterprises. And by that, I mean the lack of electricity supply, the logistical issues, the increasing role of the private sector in sorting out these issues, private sector being able to generate electricity, the private sector getting involved in logistics and sorting out the bottlenecks there. Over the medium to longer term, that will have a beneficial effect on the economy in terms of getting us towards a somewhat higher growth path, maybe a more sustainable higher growth path. And it's not happening overnight, it's not happening immediately, but businesses and investors are starting to see that benefit. So the economy is getting more private sector help, and that's certainly going to help. So yes, totally. The economy at the moment is very weak. Lack of electricity, logistical issues, and the lack of confidence. That's keeping a severe downward pressure on economic growth. But as we move through these issues and the more private sector help that we get, gradually we'll move to a higher growth path. Again, it's not going to be immediate, but we're on that path already.
Johann, thank you so much for your time here in SABC News. Truly appreciate it. That is Johann Els. He is Old Mutual Group Chief Economist, just giving us an insight there in terms of what the latest fuel hike means for South Africans.